If Bitcoin is a store of value, why does it fail 3 of 4 tests every real store of value must pass? Welcome back to Crypto Info, Blockchain Made Easy with your host, Frank the Crypto Tank. We hear it all the time. Bitcoin is digital gold. Bitcoin is a store of value. Everyone should buy it. Well, I'm sending out an S.O.S. on this S.O.S. or store of speculation, because when you apply the 4 key pillars of what a store of value should be, Bitcoin fails on 3 of them. Let me walk you through this thing. What is a store of value? Number 1. The term is defined in economics as an asset, commodity, or a currency that you can save, retrieve, and exchange in the future without losing purchasing power. Another way, you hold it, you use it later, and you're confident its value is maintained. The 4 key elements of a strong store of value. Let's name 4 traits a true store of value needs. One is durability or permanence. It doesn't degrade or vanish over time. Number 2 is scarcity or controlled supply, limited supply or predicted reduction. Thirdly, stable demand over time. People want to hold it, not just trade it. Number 4, preservation of purchasing power. It has to hold value relative to goods and services. Volatility should be low. Okay, let's assess Bitcoin against these 4. Durability, permanence. On point 1, Bitcoin scores reasonably here. Okay, the ledger persists. The network exists. The assignation of coins to addresses remains. So, at first glance, yes, Bitcoin doesn't rot like a perishable good, but being in someone's wallet indefinitely the way Bitcoin is, available to be dumped anytime on the market, is not the same as true permanence in the sense of holding value. Scarcity or controlled supply. Here's where the first big fail happens. Bitcoin has a capped algorithm maximum of about 21 million coins, as we know. Okay, so proponents say, you see, that makes it scarce. Therefore, it's store of value worthy. Now, here's the argument. Capped supply is not enough to guarantee scarcity in the store of value sense. Why? Because no coins are ever being burned, guys, or permanently removed from supply at the protocol level in all cases, right? They simply exist in wallets, active and dormant and ready to be dumped. Just because there'll only ever be 21 million doesn't mean all of them are locked away and never available again. They're always accessible. They're never removed for potential supply dumps. If a large amount of coins are dormant but still floating in wallets, ready to enter the market at any time, unbeknownst to others in the market, right? Then scarcity is weak. That's not scarcity, that's a control mechanism. Come on. True scarcity is in a store of value sense means supply should shrink or be firmly locked, or consumption should reduce availability, like XRP, the way it's burned on the ledger. Bitcoin lacks that mechanism. Thus, the capped at 21 million argument simplifies scarcity, but ignores circulation, dormant balances, and future supply re-entry, right? So, stable demand over time. Second fail. A strong store of value has broad, stable demand. People hold it for a reason beyond price will go up, right? They hold it because it is valued and trusted and used. Bitcoin's demand appears highly speculative to me, guys. People buy believing someone else will pay more for it later. The so-called greater fool dynamic. Studies show Bitcoin's volatility is high orders of magnitude higher than currencies or recognized stores of value. So, when demand oscillates based on speculation, hype, and FOMO rather than utility or broad acceptance, it fails the stable demand criterion. If demand collapses through regulation or competition, Bitcoin's value is at risk. A hallmark of speculation is not reliability. Preservation of purchasing power. Third fail. A store of value should maintain purchasing power over time. Bitcoin fails because, why? It does, because its price relative to goods and services is extremely volatile. Doesn't matter that it's higher, it's volatile. It's got to stay correlated, close to it. That it surpasses it and is worth much more than it does not work for anybody. I've had this discussion with friends. Oh my goodness. Its price relative to goods and services is extremely volatile. It's not supposed to happen. It's supposed to correlate with risk assets, not be behaving like a safe haven. It has no intrinsic yield or cash flows. The only expected return is price appreciation. That makes it purely speculative. Because of volatility and speculative demand, guys, this makes it pure speculation, not a utility play at all. Because of volatility and speculative demand, preserving value becomes a gamble, not a reliable hold. It's been going up and to the right ever since its inception. That's great. Too volatile. Okay, it's evened out, but still too volatile, guys. All right, let's summarize the failure. 3 of 4 gone. Recap here. Durability, pass. Scarcity, fail. Stable demand, fail. Preservation of purchasing power, fail. Therefore, Bitcoin cannot credibly claim full store of value status. That is a false statement. It behaves more like a store of speculation. I'm sending out an S.O.S. Why does this distinction matter? Why is it crucial? Because if you treat Bitcoin as a store of value or an SOV, you are assuming stability and safety. But in reality, you're holding a high-risk speculative asset. And yes, I'm sending out an SOS on this SOS, this store of speculation, because buying Bitcoin under the premise of it's the next digital gold is like wearing flip-flops in a frickin' hurricane. Sure, you're comfortable now, but are you really dressed for the storm? Addressing counter-arguments, let's get fair about this, okay? Let's be fair. Proponents may argue here, Bitcoin's cap gives it digital gold status. It's decentralized, trustless, and censorship resistant. Over long periods, it has outperformed assets, all of the other assets, in fact, incredible in that regard. Yes, Bitcoin has had stellar returns, but in fact, above all others in history, but exceptional returns do not equal store of value status. As Eugene Fama noted, an asset without cash flows, whose value depends purely on a higher bidder later, is speculative. Why people still buy Bitcoin like it's a store of value, right? Because psychology, because of narrative, because of FOMO, for all these reasons, okay? Because the story is compelling, finite supply, decentralized, inflation hedge. In some regions, Bitcoin may serve as a hedge when currencies collapse or banks fail. This is very true. There's no getting around that. It's a definite plus for Bitcoin. But that's not the same as being a globally reliable store of value for ordinary savers. The importance for us, especially when we talk about XRP and other digital assets, guys, if we recognize Bitcoin as a store of speculation, we can reframe the market as such. Some assets are built for speculation. That would be Bitcoin. Some memes and so forth. Others for utility and institutional adoption. Compare XRP's ledger burns and flows, right? The difference is abundantly clear if we're paying attention. We'll explore that in future episodes, of course, but if we're paying attention to crypto, you know just a little bit about blockchain technologies and how some of these things operate, we can see the truths instead of listening to hearsay and parroting things somebody you think is smart might have told you. Final thoughts. So wrapping this up, okay, a true store of value must preserve purchasing power, okay, benefits from scarcity, it must enjoy stable demand, and be durable over time. So Bitcoin only convincingly hits durability. It fails on scarcity, demand, and purchasing power. It acts like a speculative instrument. Buy now, buy now. Hope someone pays more later. We're doing that with all of them, but we need a backbone, though. Come on. Hence, Bitcoin equals store of speculation, not store of value. So when someone says Bitcoin is digital gold, you got to get this stuff. Ask which gold? Gold in a safe or gold in a slot machine? Thanks for joining us on Crypto Info, Blockchain Made Easy, with your eyes wide open host, Frank the Crypto Tank. Please tap that like and subscribe down below if you don't mind. It helps us out a great deal with the algorithm. Please don't forget we have launched our Patreon as well. Check out the happenings in there. And don't forget to tap our Caleb and Brown affiliate link down below. Your one-stop shop for your next cryptocurrency brokerage cash out and this next cryptocurrency bull run. Guys, we love you. Catch you next time. See ya. What I don't want, however, is at the best take we do for me to have it go off and then we can't recreate it. So that's on vibrate.